Markets continue to be down about 40-50 odd points. Not much in terms of volatility, not much in terms of volumes, and it gives you a sense that market is, trying to just wait for the Fed event. Avinnash Gorakssakar now joins us from our India Bull studio. Good afternoon, Avinnash. Thank you for taking out time for us. Firstly, if you could just start with the low volumes that we are seeing in the last few days. You think it's because of the Fed event or because of a lot of activity that we saw in the last 10 days and traders are largely absent in the market?
Now, I think as the Fed event approaches, I think the markets are probably getting a little cautious as to what finally would come out, from the Fed meeting. Although chances of a Fed rate hike, Pankaj, look to be a little difficult because I think looking at the China factor, there could be possibly, a delay from September to December. But I think the markets are now clearly looking forward that, if the event for the rate hike is definitely going to happen, if not now, then in the month of December. But coming back to the point that last 2 days, markets were slightly high. Now again the volumes are missing. So I think probably once the Fed decision is out and we do come to know whether the rate is hiked or whether it remains neutral, I think thereafter there could be some kind of positional kind of movement for the markets, and then the market would obviously be looking at the RBI policy. So I think both the events are equally important. I think the market wants that the RBI should also deliver a rate cut which is more or less expected for a long time. CPI numbers have also been quite encouraging. So I would say that this volume kind of sluggishness would continue for a couple of days. Once the Fed meet is over, I think from thereafter, in the week coming onwards, you could see volatility coming back.
Hike or no hike, you think markets would tend to go up across the globe? It's a big event. People have been uncertain about it, and a no hike or no sort of direction on the hike would again make slightly 3-4 months vulnerable, maybe in December, maybe in next March. So do you think it's better if we have a hike and a clear direction coming in from the Fed?
No, I think it would actually make things easier for the RBI, Pankaj. If the rate hike does come in, I think, once and for all, this uncertainty, since the last 2 years, we have been hearing that, Fed would now look at raising interest rates. So I think to a large extent, an economy like India, I would presume that in the short term, a lot of hot money would definitely go out. That could possibly impact the sentiment. But I think
that will be a 1-2 day phenomena, right?
Yes,
the pain has gone out. The people who were trading that event or, hedge funds that come in only because based on event, they would probably reverse their position. You think long-term money would start to take out money because of such issue or 25 basis point hike?
No, I think long-term money would definitely continue to remain in India, Pankaj. I think we are talking about the hot money. So, your point is right. For maybe the next 2 to 3 days, once the decision is out, you could see a lot of volatility, a lot of sentiment getting hit by this event. But more or less, I think everyone is agreeing that the kind of opportunity the Indian market offers and the risk reward which is available here, I think is not available across, the other emerging markets. And with China having all sorts of problems, I think you're going to see a lot of long-term money coming to India. I mean, obviously, there are a lot of political issues, there are a lot of, key events like the BR elections, or for that reason, policy developments like, GST, land bill. But overall, I think if you see the earnings growth story, I think probably, if not FY16, FY17 definitely looks better. So money will definitely keep coming in. I think there's no doubt about it. But maybe in the short term, we'll have to see this volatility.
Right. The point that you essentially made that, there might be outflows, there might be, some panic in the market because if there is any catastrophic event or if there is any negative surprise coming in from the Fed, because of what has happened in the last 20 days, you think the positions in the market are light and the impact may not be as high as we have seen in the last 20 days? Even if there is a selling of, say, about 1,000 odd crores that we need to absorb or 1,500 odd crores that we need to absorb, you think the leverage positions in the market are very low because of last 20-25 days underperformance that we've seen, and that's why the panic may not be as high as what it would have been otherwise?
No, the panic from the local players may not be very high. As you rightly said, positions are not very highly leveraged, so the market is light to that extent. But in case we see large FII flows, outflows, then I think to that extent, it could create a little bit of uncertainty. August has not been good. September has also seen a kind of outflow of roughly about 5,000 to 6,000 crores. So clearly, I think the entire action would be on what the FIIs do. And I think clearly, unless that trend, changes, except for one day in September, we have seen a very small inflow. outflow. So clearly what is really worrying is if the FII outflows increase significantly for a short period of time, that could possibly upset the cart. FII numbers are more important from a sentiment point of view, because despite all the buying done by local funds, the markets have not been able to hold on to higher levels. So my sense is FII numbers are going to be crucial, and I think local participants are anyway quite light on the market. So there's very little leverage which we have been hearing from the market point of view.
So overall, we are not in a panic situation even if there is a 25 basis point hike.
No, I don't think it's going to be the end of the road for the Indian markets, and FII flows are not going to come in.
Exactly. The point that you made, that it's not the end of the world if that happens. Say on another event, if there is a 25 basis point hike, but they very clearly point out that the next rate hike may be quite slow, or they would look in for more confirmations coming in for data. So basically, they'll not be as aggressive as how they have been in the past. Would that be taken in quite positively, that it will happen slowly and steadily and not in a very aggressive manner?
No, I think that is how, Pankaj, it will happen, because it's not going to be so easy to raise interest rates in US that easily. I think the first rate hike itself will be quite important, and after that, very clearly it will be data driven. It will be dependent on how the US economy actually shows sign of a robust kind of growth. So my sense is, I think this will definitely be soothing for the Indian market as well as other emerging markets, because that gives a feeling that probably whatever rate hike comes, it will be data dependent, and obviously if the US economy does well, mind you, that also will actually help the Indian companies, because a large portion of Indian exports actually come out from the US markets. So to that extent, longer term, I think a good US economy is in a way going to be long term beneficial for the Indian companies.
Right. And about the RBI rate hike, how big an event would be that, or 25 basis point do you think is factored in?
No, I think 25 basis point, Pankaj, looks to have been factored in, but I think the markets are looking at numbers like CPI, WPI, but I think the clear negative surprise which has come out is the monsoon factor. If you see the monsoon performance, I think a 16% rainfall deficit is definitely not something easy to digest, and I think the RBI will definitely keep a look at this factor also when it decides to cut rates, because clearly I think rural demand is going to be a very big element going forward. One could see definitely some sort of corporate earnings getting impacted, for companies who have got a very large rural kind of base.
Right. Avinnash, just stay on with us. We're taking a quick break. Coming back in 2 minutes, I want to discuss some stocks on the other side of this break.